The Ichimoku Cloud, also known as Kinko Hyo, helps traders to identify potential support and resistance zones. The name is loosely translated from Japanese to mean "at a glance," meaning traders would be able to determine the trend and direction of the market at a glance. There are 6 key components that make up the Ichimoku Cloud: Tenkan-sen or conversion line, Kijun-sen or baseline, Chikou Span A or leading span A, Chikou Span B or leading span B, Kumo, and Chikou Span or lagging span. When prices are above the cloud, it shows that prices are faced with bullish pressure and there's potential to move higher. Conversely, when prices are below the cloud, it shows that prices are faced with bearish pressure and have the potential to move lower. And what happens if prices are within the cloud? In that case, we take it to be neutral. Tenkan-sen is primarily used as a signal line and is calculated by taking an average of the highest high and lowest low for the past 9 periods. So how can we interpret the Tenkan-sen? Think of it as an indicator of market trends. If the Tenkan-sen moves up, it indicates that prices are in an uptrend. Conversely, if the Tenkan-sen moves down, it indicates that prices are in a downtrend. If the Tenkan-sen moves sideways, it indicates that prices are trading within a range. The Kijun-sen can be used as a confirmation line as well as a support and resistance level, and is calculated by averaging the highest high and lowest low for the past 26 periods. The Kijun-sen works just like the Tenkan-sen. However, because it takes more periods into its calculation, 26 versus 9, it's less sensitive to price changes when compared to the Tenkan-sen. It can also be seen as a longer-term moving average. Both the Tenkan-sen and Kijun-sen are used together, and the way traders use them would be similar to the moving average crossover strategy. As mentioned above, the Tenkan-sen and Kijun-sen are calculated using the 9 and the 26 period high and low respectively. This means they look back 9 and 26 periods, candles, take the highest and the lowest price levels during that period, then use those values to plot the line in the middle of that range. These two lines are essentially moving averages, and they can be used in the following manner. 1. They act as support and resistance during trends, just like moving averages. 2. They provide momentum information, similar to the moving average. And 3. Moving average strategies can be applied to the Tenkan and Kijun. Very simply, observe the points where the shorter term MA, Tenkan, crosses above or below the longer term MA, Kijun. In this method, when the shorter term MA crosses above the longer term MA, it's a buy signal, as it indicates that the trend is shifting up. This is known as a golden cross. Meanwhile, when the shorter term MA crosses below the longer term MA, it's a sell signal because it indicates the trend is shifting down. This is known as a death cross. Chikou Span A, sometimes called leading span 1 or leading span A, is a line that forms one edge of the cloud. So how can we interpret them? If prices are above the Chikou Span, the top line serves as the first support level, while the bottom line serves as the second support level. Conversely, if prices are below the Chikou Span, the bottom line forms the first resistance level, while the top line is the second resistance level. While there's no need for any manual calculation as the indicators can be loaded on TradingView, the Chikou Span A is usually obtained by taking the average of the Tenkan-sen and Kijun-sen plotted 26 periods ahead. Chikou Span B, sometimes called leading span 2 or leading span B, is a line that forms the other edge of the Kumo or cloud. Together with Chikou, leading span A, the cloud helps to identify support and resistance areas. Generally, the Chikou Span B is plotted based on the price action over the last 52 candles, though this is dependent on the time period used in the chart. If prices are on the 1-hour chart, it means you're taking into account price action over the past 52 hours. Similarly, if you're using a 1-day chart, it takes into account price action over the 52 days. Generally, markets are bullish when Chikou Span A is above Chikou Span B, and vice versa when markets are bearish. Traders often look for Kumo twists in future clouds. Where Chikou Span A and B exchange positions, it's a signal of potential trend reversals. Kumo is another word for cloud, and it is represented by the colored space or distance between Chikou Span A and B. As Chikou Span A and B move along with price, the cloud's shape and height changes accordingly. The cloud edges serve as current support and resistance areas for prices. With reference to the chart below, we can see that larger price movements form thicker clouds, which create stronger support and resistance. As thinner clouds offer only weak support and resistance, prices can and do tend to break through such thin clouds. When prices are above the clouds, we can safely say that price is trending upwards. Conversely, when prices are below the clouds, we can also safely say that prices are trending downwards. Now let's look at another example. As seen in the image, the cloud is thick and the price seems to find it difficult to break through to the downside. In fact, the bottom of the cloud acts as a second support level where price bounces higher and continues to trend upwards above the cloud. More recently, at areas where the cloud is thinner, price seems to have no difficulty breaking above and then nearly reversing and breaking below the cloud again. Chikou Span, also called the lagging span, is formed by plotting closing prices 26 periods behind the last candlestick. However, despite having a default setting of 26 periods, this number can be changed to increase or decrease the distance between the span and prices. So how is that useful to us? Chikou Span helps us identify trend changes when combined with other elements of the Ichimoku Cloud. When prices are above the Chikou Span, it usually indicates a weakness in price and the potential to move lower. Conversely, when prices are below the Chikou Span, it shows that there's strength in prices to move higher. Simply put, you can think of this line as a magnet that pulls prices towards it. The Chikou is generally used in combination with candlestick of 26 previous periods. If Chikou is above the candlestick of 26 previous periods, we can say that today's price is in a bullish phase. Conversely, if Chikou is below the candlestick of 26 previous periods, we can say that today's price is in a bearish phase. If the Chikou is touching the edge of the cloud, we can expect today's price to react. The chart above shows what happens when the Chikou touches the edge of the cloud. It has been color-coded. The blue bubble is the first scenario, the orange bubble is the second scenario. All in all, while the Ichimoku indicator seems to be all-encompassing, it only works well in a trending market. Hence, it's important to ensure this indicator is applied on currency pairs that are showing a clear upward or downward trend to provide us with more reliable trade signals. So, how can we determine the strength of a trend? This brings us to our next indicator, the Average Directional Index, ADX. In the next video, I'll show you exactly how to use it. So like this video, subscribe and hit the bell icon so you won't miss it.